Most people are out here overpaying in taxes just because they don't know the rules. Meanwhile, the top 1%, they are writing off damn near everything and doing it legally. If you're in real estate, you're a content creator, you're a business owner, you're a medical professional working in a 1099 contract job, you got options. And I'm gonna break that down on how to turn regular everyday stuff like your rent, your meals, your cars, your vacations into tax write-offs. No extra spending, just shifting how you move. And before I give you all the tools, my name is Chris. I'm a licensed IRS enrolled agent and I have my own tax practice over 10 years. Please make sure to hit that subscribe button so I know that this content is valuable. Let's lock in. Here's the foundation. One line from the tax code that changes everything, section 162. It says, if an expense is ordinary and necessary to your trade or business, you can deduct it. So what does that mean? It means if you're out here making money outside of a regular W-2 job, like closing deals, filming content, running your own practice, you already qualify as a business. Now, with that being said, there are limitations to section 162. A lot of tax influencers don't talk about this, but these sections are: section 262 says no deductions for personal living or family expenses. Section 275 are limits on deductions for travel, meals, and entertainment. Section 280A are limits on home office and mixed-use property. Section 183 are limits on hobby loss. Basically, you need to be in pursuit of profit, but that's okay. Even with all of those limitations, what I'm about to tell you today will allow you to properly navigate those limitations and you don't have to worry about it. And another myth that I want to dispel: you do not need an LLC. You do not need a fancy office. You just need to be doing business and have some strategy behind how you spend. Let's get into it. Let's start with your biggest expense, your home. You're paying rent, maybe a mortgage, you're paying internet, electricity. That is money out of pocket, right? But even if you're running your business from your home, even just a small part of it, you are entitled to a percentage of that back. Let's say 10% of your home is your office. You're on Zoom calls, editing videos, managing contracts, doing follow-ups. That means 10% of your rent, Wi-Fi, utilities, and even homeowners insurance can be deducted. That can save you anywhere from $5,000 to $8,000 a year just sitting there. Now, here's where it gets a little better. There's something called the Augusta Rule. You probably heard about this on social media. If you hold trainings, team meetings, content shoots, strategy sessions, podcast sessions, you can rent your home to your business. Let's say the market rate to rent your home to your business like yours for a day is $1,000. You can do that 14 times or fewer per year. That's $14,000 your business gets to deduct to you and pay you, and then you yourself, you don't pay any income tax on that money. So your business gets a tax write-off and you get a win. For the next category, everybody eats, but only the smart ones get to write it off. If you're breaking bread with clients, collaborators, patients, or even prospects, that's a business meal, and that's a deduction. Creators, maybe you're shooting content at a cafe with your videographer, write it off. Real estate professionals, maybe you're buying lunch after showing a couple houses to a couple, write it off. Medical professionals, maybe you're networking over lunch with someone you're partnering at a clinic. Yup, write it off. The IRS said that you can deduct 50% of your business meals. So if you spend $5,000 a year on business meals, you get to write off $2,500 on your taxable income. Another hack about meals: if you're traveling across the country for educational purposes or a seminar, those meals on that trip would also be a deduction too. I do need to talk about some abuse. You cannot write every single meal. Court cases have talked about this. The meal must be irregular or infrequent. I talk about this many times on my podcast and my shorts. Click the card above to learn more about this kind of abuse. And for record keeping, just keep a receipt and a note of who you were with and what it was for, and that's all you need. Let's move on to number 3, cars. And this one gets overlooked a lot. But if you're using your car for business, you better not be paying full price at tax time. If you're driving to open houses, maybe you're shooting content at different locations, or maybe you're just grabbing supplies for your medical office, that mileage or even the expenses related to it can be written off. There are 2 main ways to write it off. The first way is called the standard mileage rate. The IRS gives you a set amount per mile to deduct on your taxes. All you gotta do is track it. Number 2 are called actual expense method. You can deduct the gas, repairs, insurance, lease payments, even a portion of the value of your car, but you write off a percentage of what was used for business. And bonus tip, if you buy a heavy SUV or truck over 6,000 pounds for business, you might qualify for something called bonus depreciation. This recently just got passed in Congress, so this is absolutely a game changer. I have another video on how to best utilize this strategy right over here. The vehicle doesn't have to be in the business name either. That's a myth. You just have to document your business use. In order to document business use, I'd recommend getting an app called Mile IQ, so that way you can track all the miles you've been driving. Because remember, it's about business percentage. If you're using mileage, then great. The mileage tracker will track all the business miles you drove. But in addition, maybe you're using the actual methods. You still need to track your mileage because you have to find out your percentage of business use. If you drive 7,000 miles of business and 10,000 miles in the entire year, that's 70% business use. So in both scenarios, you have to track your mileage, and the mileage log is the only way that you will be able to pass an audit. Expense number 4, if you're running your business right, your tech isn't just an expense, it is a write-off. That iPhone you just financed, write it off. That MacBook you use to edit your videos, draft contracts, or manage your CRM, write it off. That AirPod you use on Zoom calls or while you're on the go with clients, write that off too. Here's the key. If you're using electronics in your business, even just partially, you can deduct the business use portion of the cost. For example, if you use your phone for 70% business and 30% personal, you can deduct 70% of the purchase price, monthly service, and even accessories like your case or charger. For creators, we're talking about your camera gear, ring lights, external hard drive, that's all business equipment. For my real estate agents, that printer, that scanner, that tablet you use during showing, those are business tools. Medical professionals, any tech you use for patient scheduling, telehealth, even research, same thing. Now for all of these expenses, just make sure you keep the receipts, track their use, and make sure they're tied to income generating activities. And when I say income generating activities, I had an example when I was talking at a seminar where someone asked me whether they can deduct a PS5 from their business. And I was like, maybe. Like if you had a barber shop and the PS5 was used for your patients to play while waiting, that makes sense. But your PS5 in your home office, that's not going to be a tax write-off, right? Same electronic used in 2 different scenarios, 2 different settings. That's what I mean by they must be tied to income generating activities. Expense number 5, are you upgrading your skills, investing in yourself? Well, that's a deduction too. You might be taking real estate continuing education courses. Maybe you're studying the latest and greatest editing software. Maybe you're paying for your nursing license renewal. All of those qualifies as a business expense if it helps you run your business or improve your income. Even subscriptions to trade journals, business books, or even attending conferences. You're going to be learning and growing anyways as a business owner. You might as well get a tax write-off while you do it. Again, there is one limitation. That limitation is the course must improve your business. So if you're a doctor taking a plumbing course, that isn't going to work. But if you're a doctor taking a TikTok ads course, well, that's going to qualify. And before I get to my next expense, please subscribe to this video if you feel like this content is valuable and you are improving your business. Expense number 6, this one is gold. You can hire your kids to work in your business. Pay them a legit wage for real tasks like social media help, admin work, organizing content, assisting at open houses, whatever fits, as long as it's helping improve the business. But please make sure to document everything as well. I also have a full video on how to execute this strategy. This only works if your kids are under age 18 and you and your spouse are the only owners of the business. In addition, that business must have an entity structure as a sole proprietor or a partnership. If so, your kids will also not pay payroll taxes, which is Social Security or Medicare taxes. And if you pay them under $15,000, which is the 2025 standard deduction, they also won't pay any federal income tax either. That's a tax deduction for your business and tax-free income to your child. You just shifted money from your high tax bracket into their tax bracket, which is 0% legally. And pro tip, once your children receive that income, have them contribute that money into a Roth IRA, allowing them to grow that money tax-free for retirement. For the last category, number 7, this is my absolute favorite one. It is traveling. And I know I said vacations earlier, I was just trying to hook you guys in, but in order to deduct traveling, it needs to be a legitimate business trip, all right? That could be a mastermind retreat, a content creation trip, a conference, a client meeting, a strategic planning getaway. Here's a checklist. I need you to plan the business purpose before you go, okay? You just can't travel there and then call it business. That doesn't work. I also need you to keep receipts. I also need you to document what happened, who were you with, what, where, and why. If you do that, now your flight, hotel, meals, rental car, all of that becomes a deduction. Your photographer going to Miami to film a wedding, business trip. You fly to LA for a real estate mastermind, business trip. You go to Vegas for a healthcare conference. Yup, that's a business trip. Just don't forget to enjoy yourself, because now part of your business trip is a vacation working for you. And last but not least, to avoid abuse, if you bring your family, because I know you will, their expense is not a deduction. So please don't say I did not warn you. Wealthy people just don't spend money, they spend strategically. And that's how you shift the game from paying taxes to playing the tax game. Everything I show you today is legal. It's just not widely known because nobody teaches this in school, but now you know. So whether you're a realtor, a creative, a medical professional, or even just running a solo business, building an empire, get smart about your structure. Start documenting everything, start writing off what's real, and stop donating extra money to the IRS. If you want help getting this set up right, shoot me a message. As always, I'll catch y'all in the next video. Peace.